Good afternoon, fellow option traders. This is Jeff, and welcome to the weekly wrap-up for April 1st, 2016. As you can see, we are just 25 minutes away from the market close, and I wanted to just quickly throw something together here on my account, or accounts actually. There's 3 accounts that are sitting with a loss over here. This is my credit spread with a short at 1100 on the Russell, which looks to be a bit in trouble, quite possibly here. But it could be or it couldn't be. I think I have a way out of this. This is how the market's running today. The Dow is up about 105, and S&P 500 is up 12.5, and Index is up 45. Anyway, they're all up around 0.5%, except for the Nasdaq, which is up over a full percent, and the Russell, which is lagging a little bit and actually was in negative territory for most of the day. The VIX is at 13.9, really starting to get down there, pretty dang low. Might be about time, if you were playing the VIX or the VIVIX, you might want to say, well, maybe I should do a bull put spread on this, because it's probably going to turn around. At least that's sort of what I'm looking at. Gold is at 1223. Oil's at 36.76. So I filled up the truck yesterday for $2.05, and today I filled up my Sienna for $1.94. So we can see that oil, the gas prices are almost follow oil, at least in their timing, almost immediately. And the dollar's at 94.61, or almost like $1.14 against the euro. So the dollar's looking a little bit weak, but not all that bad. But what I wanted to do here is I wanted to just focus on this credit spread here. This is a bear call spread at 1100 and 1120. So there is a 20-point spread here between the short and the long position. Looks like this on the Analyze tab. Let's go here to RUT. And this is what it is looking like right now. Current price is right here. So we're showing this rather large loss sitting out here right now. And if we look at the expiration date is the 15th, which is only 2 weeks away. Now, the standard deviation here in the shaded area for this period of time, which is 2 weeks, doesn't look real good now, does it? Let me see. I think I might have messed up that price slice. Yeah, I'll unlock that. Doesn't look real good. So I have an idea. Let me slide this up, and we are going to give us full screen here. All right, so what could I do? Well, here's what I'm looking at doing. I'm looking at rolling this. If I roll it out to May, it would cost me 85 cents, or it would take an $85 hit on it. And I don't even want to look at that one. I'll take that one off right now. But I was thinking about quite possibly condorizing it. So the other thing that I can do to get some of this 80 cents back, if I could roll it for that price, would be to go ahead and do a bull put, and that would be at 970. So I would collect 67 cents on that, and we would have an iron condor for May expiration. So I could just be putting off my loss and taking it in smaller increments and trying to offset it with bull puts, and I think that that's probably what I'm going to end up doing. How would that look on a chart? Well, I already have it mapped out here. No, I don't have it mapped out on this one. It's on this one. Okay. So if I was to do that, this little box here represents the safe zone or the profit zone here for this May expiration out here. And this is pretty easy to do by doing a shaded box like this. All you need to do is just draw a rectangle and then go in here and say I want to edit the properties. And our short on the put side is going to be at 970 and our long is going to be at 1100. And originally when I drew this it was March 14th. I could move this up, but I'm just going to leave it there right now for there right now. And then May expiration is the 20th here. So I'm saying that the bottom right point is at 970. That's right down here with this date of 5/20. And the top left point is right up here, and that is this 1100 value with a date of 3/14, which I could change to 4/1. I mean, I'm not picky, but we could change it to 4/1. Moves it a little bit, moves it out to this bar. Just catches the edge of this bar. So now, is the Russell going to move back down into this territory? I don't know. But if I can do an iron condor and almost pay for this adjustment that I'm going to be doing, if I can get this price, that's where the danger comes in. Is very, very seldom are you going to be able to do a roll for this for the midpoint price that is displayed up here. Usually you have to do it in pieces to get the best price. If you try to do a roll like this, you may wait until hell freezes over before you get that. This is pretty sure you can probably do this pretty easily, but I can't do the put side until after I roll the call, because otherwise I would have to have cash reserves of like $4,000, and I don't want to take that kind of risk. Right, I'll just wait on the put side until after the call side is done. All right. So we have a little bit of time left here, but that's what I'm thinking about doing. And you know, it wouldn't really look all that much better or anything. And now I know why I had those other ones up there, is so that we could see what the risk profile would look like. It actually kind of looks like, it actually looks kind of messed up. So anyway, we have, we're looking at 415 now with our standard deviation move between now and then at the current price. So we could end up down here. There's a chance that we could do that. But, you know, there's also a chance that we may not. Actually, if you're looking at a 50-50, there's probably about, let's look here. It doesn't even show up, does it? 32%, so we're a 68%, 32% that chance of it ending up down there. And the rest of it is taken on the other side. So we have 52 and 15 here. 62, 67. Yeah, that's about right. Yeah, that's what we came up with. Plus a half roughly there. So it's not real good. We have a 32% probability that it will end up below the break-even point here. Not a big percentage, is it? But it's still better than what we're looking at right now. If we look at it right now, oops, expiration for April 32. Now wait a minute. Yeah, we're talking about moving it out to May. I'm sorry, My mistake. Here, that would look better. Now we're looking at a 40% chance. So this between now and May expiration. Here's one standard deviation based on the current price. Current price is right here, this gold line. So, that's something I'm willing to hang in there with. Okay, so now the other thing I wanted to just take a peek at here is my simulated trade in Ford. And the symbol is F. Let's jump over here and take a look at chart. We currently have a 1275 in our simulated trade. This morning we had a 1275 April expiration, and today I rolled it simulated trade-wise to June at 1275. So the way that we look right now, actually, let's go over here, take a look at the spreadsheet. Here we go. Here's F. This tab down here is F. So on 4/1, we rolled the April 16 to June 16, which was that 1275. It's 1275 call. I'm going to fix that here right quick. And the price of Ford was at $13.11. So that cost us at that time $50 to buy that call back, and then selling the June 1275, we collected $71. So this is where this line right here is where we were sitting prior to that. Now, if we would have gotten called out, if we would have been called out during this period that I was holding it, we still would have made 11.06% on the trade. But by rolling it, now we're sitting at 12.71% if we get called out. So far, our return on our investment is 18.34%, but that's all like, some of this is realized because of these credits that we collected. So all these credits in this column are ours to keep, but we need to hang on to the stock. I believe there's a good possibility that we may have a dividend coming up. Earnings. Is there a dividend? They haven't announced a dividend yet, but we have earnings coming up the end of this month. So we should be collecting another dividend, which hopefully will be 15 cents a share. So we collect another $15 the end of this month. That would be nice. I would not complain about that. I hope this volume is not too loud. I see him pegging the meter out here. Maybe I can move the microphone a little bit further away from my mouth. That might be a little bit better. Okay, so that's where we are with this particular trade. If I get a chance, I'll run this up to my blog. Well, if I post anything on my blog, I will also run this up there so you guys can take a look at this yourself. GLD, we're still hanging in there with that. We have a June. What's our strike here? 122 strike. We rolled June 16th, June 119 to June 122. And it cost us a little bit because the price of GLD was moving up. GLD is currently at, let's go to regular charts here. $116.95. So we just gave ourselves a little bit of a cushion here. We could have left it at 119. But that's okay. We wanted to make sure that we were safe because we were very confident that that gold was going to move up. Now remember, way back here, we paid 131.97 for it. So now our cost basis is at 12,409, which is just a little bit over what we paid for it originally. So we're hanging in there, considering that it's dropped, what is it, like 20 points almost? Yeah. Maybe 18. Dropped 18 points. So we're still hanging in there. We would not even lose much if we got called, but at this point there's no way we're going to be called with a 122 strike here. So we don't have to worry about that. So I'm just sitting back on gold. You can see here it looked like as though it was going to recover back in February, and maybe we might have been on a tear, but it's backed off since then. All right, I think that's all that I have for today. Is the market done yet? How are we doing? We have 8 minutes. Russell's up $4, so we're now at 116. So Monday or Tuesday I may be rolling this trade. We'll see what happens over the weekend. If there was some good news out there, I would be more bullish on the market, but here in the U.S. there's really not a lot of good news, and really around the world there is not a lot of good news either. So I don't mean to be a pessimist or anything like that, but I'm just thinking that here's an observation for you before we go. Remember, this is the 20-month moving average, and I'm saying, well, this is kind of a big green week here, wasn't it? Just like this one back here was a big green week. I want to zoom in a little bit more on this. Big week here, and then weakness, and then kind of a big week. Started out weak and recovered nicely, but here's what I'm looking at right here. Is this 20-month moving average and the close from last year. So, we may end up at 1,200. I don't know. The 20-month moving average is at 1167.49 right over here, where this yellow bubble or gold bubble is. So that's what I'm going to be keeping an eye on. And that is it for the video for today, for the Friday wrap-up for this week. I didn't get one last week, did I? But I think I had some things going on last Friday that I couldn't get to it. So anyway, I'm glad to be back today, and I would like to be back every Friday from now on. So thanks for watching. Have a great day. But most of all, be happy when you trade.